From Los Angeles, TraderInsight.com presents Dr. Adrian Manz in the war room and at the helm with today's look at stocks and sectors on the radar.
For TraderInsight.com, I'm Adrian Manz, and this is Stocks and Sectors on the Radar for Tuesday, April 21st, 2009. On Monday, Dow Jones Industrials down 290 points to close at 7841.73. We had 298 stocks advance, 2,800 decline, and NYSE total volume 1.76 billion shares. We had lousy internals, and the market closed right on its lows. We're down at the bottom of that range now. We're going to hope that we don't get some more bad news on Tuesday. If we do, next stop for the Dow, probably down around 7,500. So I'm not willing to say that this is the beginning of the next leg down, or that this whole push here was nothing but a bear market rally, although it probably is a bear market rally. I'm really not expecting a retest of 6,500 anytime soon, but 7,500 seems like it might very well be a reality. Now, as for the S&P 500, down 37.21 to close at 832.39 on the session. Would have liked to have seen this one hit 900 before any kind of a retest of a lower part of the range. Didn't get that. Got as high as 875 on Friday, and now this banking sector stuff, heavy on the financials in the S&P, obviously, and all this credit worry that came out today is definitely not going to do the S&P any favors. Probably going to see some more deconstructive price action on the index before we see this thing try to ratchet to the upside again. NASDAQ 100 down 44.5 to close at 1309.37. NASDAQ Comp down 65 to close at 1608.21. The VIX shot up on Monday, up 5.25. That's a huge move on the VIX. We're up around 40 on the VIX on the session, so we're going to see what happens going forward here. Makes for some tough trading, but also when it's when it's steady and climbing, it makes for some interesting moves intra-session. We'll see if that creates some opportunities for us going forward when we look at what's on the radar for Tuesday's trading. First, let's have a look at what happened with the trades on Monday. If you'll recall, we had AVX, CP, and HAS that were all on deck for the session. Now let's have a quick review and then move on to a couple stocks we're looking at for Tuesday. AVX and CP gapped lower and kept going lower throughout the session. No sense even looking at those. Hasbro, on the other hand, this one we had a 28.12 entry, 28.64 profit target. Looking at the chart here, the stock had a miserable day, but we had a very good time with it. We're going to take a look at a 5-minute chart and then at a 25-tick chart to see how that might be useful in handling a trade like this. 5-minute is, of course, the time frame that I use most regularly. This one, Hasbro, opens down around the central pivot, trades up through our entry price, goes through first resistance. Once you get first resistance behind you, logical target is second resistance, up around $29.15. Stock got as high as $29.20. Reality was $28.80 was the curtain call for us as there was a reversal. Here's the way that a 25-tick chart represents this data. We see that we still have a 28.12 entry right off that opening bar. Move up to $28.64 is not far behind. What a 25-tick chart does for us is allows us to see the support and resistance that forms in a price compression rather than a time compression, so that when things all happen in that first 5 minutes of trading, we have a better grip on sort of where the bodies are buried. Now, this is not the same thing as converting this down to a 1-minute chart and just taking the time compression and loosening it up so that we get lots and lots of little bars. This is representative of price action as it happens in the market and gives us a pretty good idea of these levels. We see that the move up above 29 really turned around, got us back down into 28.80, which is a logical place for us anyways to stop the trade. On a discretionary setup like this, we already had an extension and we were just looking to put a couple extra pennies in our pocket. Now let's take a look at what we are going to be watching on Tuesday. I've got two financials and I've got a metals and mining. First one is Brookfield Asset Management, ticker symbol BAM. This is actually a real estate management in the financials. This is a fastball expansion of range, minor expansion of volume, trade below $13.80. Going to have me looking for a move down to around $13.38. Next one is BlackRock Incorporated, ticker symbol BLK. There's an expensive one, but trade below 123.29. Going to have me looking for a move down to about 122.60 on this fastball move out of this high-level consolidation. Finally, in the metals and mining, I've got Freeport McMoran. This is ticker symbol FCX. This one was really extended. It's not a fastball in the true sense of the word. The expansion really isn't that significant, but the move, boy, if there was a line drive set up on the short side, this would be it. I'm going to watch Freeport for a move below $38.77, all the way down to $37.90. If you have any questions, shoot me an email, adrian@traderinsight.com. Use protective stops on every trade, and have a great trading day on Tuesday.